We're now solving question 6A from our May 2024 examination question. 6A had two options. You could have done one on accounting standard 19 leases, or you could have done one related to AS20 EPS. This is a 4-marker question. They have asked you not just to compute basic EPS, but they also are wanting you to compute diluted EPS. That's okay. Let's get started. Look at the question. It says that on 1st of April 2023, this is the information available. Company had 50,000 equity shares of rupees 100 each, rupees 80 paid up. So the shares are not fully paid up. So we have 50,000 shares of rupees 80 paid up. And there is preference shares. So these preference shares would have to be adjusted with regard to our earnings available to equity shareholders. If these preference shares are to be converted to equity shares, then this is dilutive in nature. We should check whether it is dilutive. Potential equity shares consideration has to be taken into care, and the earnings available to equity shares also will change because they will no longer be preference shares and then turn into equity shares. Then we have debentures. Same with debentures also. But debentures part, what we need to be slightly cautious is they would also affect our interest. Sorry, they would also affect our interest expense, which is pre-tax, because of his tax expense will change. With regard to preference dividend, the point is very simple. After tax, we deduct preference dividend. If there is no preference dividend, we'll just take profit before tax. Very simple. But if interest is no longer there, then what happens? Tax rate will increase. Because interest is not there, profit will become more and tax will become more. We'll check with this part. Okay, we'll do it. Don't worry. Each debenture is convertible into 3 equity shares. Each debenture is convertible into. Okay, how many debentures are there? 10,000. So it will become 30,000 equity shares. Potential equity shares is how many? For diluted EPS, denominator will shift from 50,000 basic EPS to 80,000. 50,000 is basic EPS denominator if there is no other adjustment. For diluted EPS, it will become 80,000 because 30,000 additional shares would come by dilution. Debentures will become equity shares. But life is not so simple. Read the question. On 1st of July 2023, remaining 20 rupees per share was called up. So April, May, June, shares are rupees 80 paid up. August to March, shares will be rupees 100 paid up. Is it so? Then simple, 50,000 into 80% into 3 by 12. 50,000 into 100% into 9 by 12. But they are complicating it slightly more by telling that all the shareholders paid except one shareholder who had 10,000 shares. So, second 9 months, when you compute 100%, you will do it only for 40,000 shares. 10,000 shareholders won't pay. 10,000 shareholders won't pay. Come on, let's finish that computation of our weighted average number of shares. I'll show the same computation under multiple methods. Shall I? Yes, sir. First, April, May, June. April, May, June. There are 50,000 shares. That is 3 months. How much paid up? Only 80% paid up. Why? Shares are of rupees 100 each, rupees 80 paid up. So do 50,000 into 3 by 12 into 80%. 10,000. From July to March, same 50,000 shares are split into two categories. 40,000 shares, they pay money. So for the remaining 9 months, they become 100% paid up. 10,000 shares, even for those 9 months, they won't pay those balance 2 rupees. So they will remain to be 80% per share. Did you all get this? Yes, sir. Come on. 40,000 into 9 by 12 into 100%. And 10,000 into 9 by 12 into 80%. Add them. You get 46,000 to be weighted average number of shares. This is for basic EPS. This is for, or you can do this slightly different. 50,000 shares, whichever are there, full year, they would be 80% paid up. Correct or not? Against this, 40,000 shareholders further pay 20%. 10,000 shareholders don't pay. 40% pay. They pay after 3 months. So 40,000 shares, 9 months, 20%. 40,000 into 9 by 12 into 20%. This way also we get 46,000. So you can do either the first method or the second method. Or you can take 50,000 shares into 12 by 12 into 100% for full period and then deduct that 3 months portion for 40,000 shares and 12 months portion for 10,000 shares. That you also will get. But one of these two is highly recommended. First one is better. Did you understand the first one?
Yes.
What is denominator? Weighted average number of shares. 46,000. In EPS computation, net profit has to be divided by weighted average number of shares. We know how to compute weighted average number. We've done. We need to take numerator, net profit available to equity shareholders. How do we take that? They have given us that during the year 23-24, company had a profit after tax of 3,44,000. 3,44,000 is profit after tax and after interest also. After interest also. From this 3,44,000, I need to pay my preference dividend and then the balance is available to equity shareholders. So now I will compute my Patesh, profit available to equity shareholders. How do I do this? Profit after tax given is 3,44,000. From this I would deduct preference dividend. How much is preference dividend? 8% of 20 lakh. 20 lakh into 8%. If I deduct 1,60,000, I will get 1,84,000 to be profits available to equity shareholders or earnings available to equity shareholders. 1,84,000 is numerator, which is to be divided among 46,000 shares. In order to find our EPS, we do 1,84,000 by 46. We get 4 rupees per share as our EPS. This says if there is no conversion. There are debentures in the same balance sheet which have the potential to be converted to equity shares. We are not converting them. If we convert them, then what will be EPS? That is what we should find. Denominator will increase because debentures have now become equity shares. How many debentures will become equity shares? 10,000 debentures. Each debenture will become how many equity shares? 3. If one debenture becomes 3 equity shares, 10,000 debentures will become 30,000 equity shares. So I will add 30,000 to my denominator. It will become 76,000. Am I right? Previously, when there were debenture holders, we were paying them interest. If in case they become equity shareholders, number of shares will become 76 and the earnings will no longer be 1,84,000 because 1,84,000 is after paying them interest. Now because they are equity shareholders, I don't have to pay interest. So shall we compute how much is the diluted earnings? Very good. Now observe. We have net profit before interest and tax, which we don't know. From this we deducted interest. After that, we got net profit after interest before tax. From this, we deducted tax at 30%. After that, we got net profit after tax. We don't know net profit before interest and tax. We know net profit before, after tax. See, they've told it is net profit after tax of 3,44,000. I will take net profit after tax of 3,44,000. Net profit after tax of 3,44,000 and correct, no. 3,44,000. Oh, sorry. We need to deduct our preference dividend also, no. After that, how much is the available part to the shareholders? 1,84,000. So, how much would I take here? Net profit after tax available to shareholders. 1,80,000. Preference dividend, I don't have to adjust. Why? Though they have given preference shares there, they are not convertible. Those preference shares will remain preference shares. Those preference shares will remain. So this 1,84,000 is after deducting tax of 30%. How much do you think is the tax? This is 70. This is 30. 184 into 30 divided by 70. 78,857. From net profit before tax, if I deduct 78,857, then I'll get 1,84,000. Before deducting, how much would it be? 1,84,000 plus 78,857. 2,62,857 is after deducting interest. Interest is 12% of 10 lakh. 12% debentures nominal value 10 lakh. 12% of 10 lakh. 1,20,000. 1,20,000 interest if I deduct, it will be 262,857. Before deducting, it will be 3,82,850. So this is how it is worked till now. But now I no longer have to pay this interest. Why? They have now become my shareholders. So I would start with the same amount. Particulars amount, net profit before interest and tax 382,857. From here, I took this, but interest I would deduct 0 because they are now my equity shareholders. That is my assumption. Now, profit before tax will become 382,857. From this, I would deduct tax at 30%. What do I get? 3,82,857 multiplied by 30%. 1,14,857. Deduct that and tell me how much is the diluted earnings. 2,68,000 is our earnings. This is one way, lengthiest way of computing diluted earnings. There is another way. Instead of doing all of this, straight away take net profit after interest and tax, what we considered in basic EPS. This is after deducting interest. Interest should no longer be deducted. Why? They are no longer debenture holders. Straight away add back interest. How much is interest? 10 lakh into 12%. That is 1 lakh 20. How did we get this? 10 lakh into 12%. Now, if they were debenture holders, I used to pay interest. Because I paid interest and it became expense, my profit was decreased and I paid lesser tax. Now, as they are no longer debenture holders, I don't have to pay interest. When I don't pay interest, my profit will increase. Because my profit increased, I pay extra tax. So, interest is a tax saver. Now, it is no more a tax saver. So, the tax benefit which I won't get, I will add back. Shall I? Sorry, I will add back. Basically, I am deducting my profit. Shall I deduct my profit? Because I am paying higher tax. Because interest expense is not there, my profit increased, I will pay higher tax. To what extent? To the extent of interest. How much is interest? 1,20,000 into 30% is the extent to which I have to pay extra tax now. Think from your taxation perspective. This is no longer interest expense. This will add back, no? Your profit will increase to the extent of 1,20,000. On 1,20,000, 30% tax will increase. How much is 1,20,000 into 30%? So how much do we get? 184 plus 120 minus 36. Very good. You get 2,68,000. That is diluted earnings. Same as the first one. I'll show you even more simpler method. All you can do is take net profit as 1,84,000. Do interest into 1 minus t straight away. Interest into 1 minus tax rate. Interest minus tax savings. Interest is 1,20,000. 1 minus 30%. 84,000. If you add back, you get 2,68,000. In fact, in the examination, they don't expect you to do any of these three working modes. Any of these three ways are not expected from you. Straight away here, you can do 1,84,000 is there, no? Interest into 1 minus t, you can write here only 1,20,000 into 1 minus 30%. Which you get 84,000 is the dilution. Am I right? So 184 plus 84. It was 184. No, because the interest is no longer have to be paid because they become equity shareholders. You need to save 1,20,000, but tax if you deduct from that 84,000 will become increase in your income. Because they are no longer debenture holders, interest is no longer supposed to be paid. Your profit is supposed to increase by 1,20,000. On that increased profit of 1,20,000, you paid 30% tax. So profit increased only by 84,000. Profit before 184. Profit now increased by 84. Diluted earnings 268. Divide 2,68,000 by 76,000. 3.53 is our diluted EPS. Usually the presentation of the answer is not like a table. They write formula. They compute basic EPS. They do all of these working notes and they do diluted EPS. I personally feel like you would like it more and you would understand it better if it is in this form. So that's the reason I presented it this way. This is a 4-marker question in the exam. Easy.